Hello everyone. On behalf of Solar Quarter and First View Group, I am Meenakshi extending a warm welcome to each and every one of you joining today's webinar on Market Insights, Solar plus Storage Future in South Africa. It is my pleasure to be here as your host. We would like to extend our gratitude to all our esteemed guest speakers and attendees for their valuable presence in today's webinar. Your active participation has contributed to making this event truly remarkable. South Africa is taking a leading role in embracing renewable energy, with solar energy leading the way. The country is actively addressing its energy challenges and striving to reduce carbon emissions. In this pursuit, the integration of solar and storage technologies has emerged as a transformative solution with immense potential. Solar plus storage systems offer a dependable and decentralized source of electricity, reducing reliance on the national grid and bolstering overall energy security. In today's webinar, we will delve into the promising future of solar energy and storage solutions in South Africa. Here, I would also like to inform everyone about our upcoming physical event in South Africa, the Solar Assets Africa 2023, which is set to take place on 11th August in Johannesburg. Furthermore, we encourage individuals to nominate who have made significant contribution in the field of asset management for the awards in the same ceremony. Before we proceed, I would like to make a brief announcement. We encourage all attendees to actively engage in the discussion by posting their questions in the Q&A chat box. Our esteemed panel speakers will address these questions during the interactive session at the end of the panel discussion. Without any further delay, let's begin our highly anticipated panel discussion for today. It is my pleasure to introduce our esteemed panel speakers who are joining the webinar today. We have with us Mr. Christopher. He is founder and sustainability specialist, Blue Horizon Energy Consulting Services. He's also the moderator for today. We have with us Mr. Nitin, founder, New End Systems. Mr. Agrippa, CEO, Dubza Solar, Tefla Group. Mr. Brian Hosking, Vice President of Client Solutions, Odessi Energy Solutions. Mr. Frank Spencer, Regional Director, Southern Africa, Kain Mani, and Mr. Kobus, Technical Director, Eversolar. Mr. Christopher, over to you. We can begin the panel.
Thanks for the introduction, Meenakshi. And as you mentioned, just to give you a little more background on myself, I'm based in Cape Town and in South Africa, and we're currently load shedding here. So I think this discussion is very timely. The need for more solar and storage is needed. Thanks to a 5 kVA battery or 5 kVA inverter and 10 kilowatt hour battery and 10 solar panels, I'm able to continue this panel discussion today. But we have several topics that we wanted to discuss, and a very experienced panel and a large panel. So let's get into some of the questions to make sure we have enough time for the discussion. But let's start with the first topic on South Africa's current energy situation. I think some of the key drivers right now for storage and solar in the country are load shedding, the rising costs of electricity from Eskom. We also have a high dependence on coal here. Over 80% of the energy generated still comes from coal. So there's a need to meet climate goals and to shift to more renewable generation. But with this in mind, I wanted to have our first question with Kobus. If you could maybe draw on some examples or some recent trends in the work that you're doing on South Africa's electricity sector, and provide us some more detailed overview on what's happening now.
Thank you, Christopher. Welcome, everyone. Yeah, so from our perspective, being in the EPC space, we've seen with the increased load shedding lately, power security is really becoming a growing concern for businesses, end users, even agricultural sector. And with solar PV being such a widely talked about topic throughout the country, I mean, you can just walk into any restaurant, you'll hear people talking about energy storage and backup and solar systems at the house. People are getting a lot more educated on what is the availability of technology and how that fits the requirement. So we've seen an increase in private off-takers also, especially to install larger scale solar PV systems with the lift of the regulations, or the cap being from 1 megawatt to whatever you you can self-consume at the moment, to be honest. And that has been a very large driver for, say, for grid-tied solar. But now with the increased load shedding events, energy storage is the topic at the moment that's really hot, say, in the industry. And we've seen a big appetite, or say a driver for the energy storage off-takers is the cost of energy in the first place, but then also the requirement to have reliable power supply to basically continue business as usual, and also for the convenience, say, in the residential sector. So linking to that, people providing their own powers through the conventional diesel backup generators have seen a big impact on the financial side of things, and that really hampers business growth. So the requirements that customers come to us with is, how do I reduce my operational cost? That is the major component at the moment, is electricity. So I think that is what we've seen as a transition from the energy sector, is people trying to be more reliant, or say not reliant, more self-sufficient, if I can put it that way. But this also comes with its challenges, and basically what is available and what can be provided, because people will come with a requirement of having 24-hour autonomy on energy storage, but that does not necessarily make financial sense. And the big spin-off here is, from contractors' perspective, is that you need to be able to package a solution in such a way that it still makes financial sense for the off-taker. And that has been quite a challenging task, because the load shedding is so variable that in one instance load shedding is stopped, and the next instance we're sitting in stage 6 load shedding. So what your future risk appetite needs to be in order to basically determine your needs and what solution you want, I think that has been a big headache for end users at this stage, because how do you size energy storage? Is it for a 2-hour, 4-hour, even a 6-hour backup? But even with that said, I think this with the current scenario, there's a big potential here for private investors to get involved, because the consumers that's struggling the most is already at the point where their diesel costs are hurting them so much that they don't really necessarily have the capex available to spend on an energy storage system, because it is a high capex investment. And to basically package these solutions in a way that it is fundable and it does make sense for the customer, I think that is the big drive at the moment. So we've been involved with a lot of projects, say, for tariff arbitrage, for peak shaving types of application, then purely backup. That's also another point, that basically just offsetting diesel cost. But because of the variability of load shedding, and the period it takes to close a high capex project, you go through these swells where the client is under pressure to provide power, and then the grid becomes more stable, and then the requirements to sort of tapers off, and then the next moment we're back in stage 6 and the customer is under pressure to get that solution going again. So we're seeing a lot of these waves, and I think that makes it difficult at the moment. But from a private financier perspective, we've also seen that the guys are really concerned on political risk with the governments and policy changes and the instability thereof, regulatory risk. So because of the energy sector being regulated by a number of players from Eskom, NERSA, the municipalities, it's really a complex environment to operate in for financiers to realize the returns in the long run. And then, the high upfront cost of these projects, and then the sustainability of the off-taker and the risk that they need to work in or factor in for returns and their investors in turn. But even with that being said, I think there's a lot of opportunities available. We've seen a lot of high growing demand for energy in South Africa, and with the population increase, this will just continue to grow even more in the coming years. The government has communicated support for renewable energy, and they set some ambitious targets to basically contribute to the country's energy mix and to combat, say, the carbon footprint thereof. But it has not come without its challenges. I don't know if you've seen in the latest news, but the last bid of IPP projects, nearly half of the projects have failed to reach financial close. So there's a communication for support, but there's also difficulty in making this realized. So I think that is, to sum it up, I think what we've seen is there is a high requirement from end users, but with the uncertainty that comes with grid availability, the cost of these solutions, and what the future will hold in terms of power security in South Africa, it has not been an easy task for end users and even financiers to invest in a sustainable solution. But it is definitely improving.
Thanks for that, Cobus. And as an EPC, I imagine you're very busy right now, as most EPCs are in the country, with addressing a lot of the consumer issues with reliability and also cost savings. But I also wanted to ask Sakile if you're seeing the same thing with some of these trends in the country related to consumer behavior in battery storage purchases, or if you have anything else to add.
Thanks, Chris. Good afternoon, everyone. Thank you for the opportunity. Chris, I'm inclined to agree with a lot of what Cobus has said regarding how clients are sort of making decisions regarding purchasing storage. I think the solar sale is a much more straightforward sale, because our clients are looking for savings on electricity tariffs, so that we're seeing much more. There's also a jump there in terms of trying to get that energy independence, and we're finding that it's a strong theme coming through, is clients wanting to be more energy independent and have greater security of supply. So with storage, the sales process, or rather the engagement with clients, is much more driven by sentiment, as Cobus has sort of alluded to, in terms of the variability and unpredictability of load shedding. So we are finding that most of our clients and customers are coming to us to offset diesel costs, and then to be able to supply immediate backup power. And then there's a lot of sort of customer education that has to go into demonstrating the full value of a storage asset, because the concern often raised is what happens after load shedding. What do I do with this asset after load shedding? And we have to sort of demonstrate the value of the solar and storage, and how it can increase their renewable energy penetration. They can benefit from things such as peak demand reduction, time of use arbitrage, and all of that. So we're finding ourselves having to sort of handhold our clients through the process, and ultimately the financing of these assets is a sticky point, because it's an expensive asset. The capex layout is quite substantial, and the available financing sort of tools or instruments are not as at an advanced stage as, say, for instance, your PPA. So there's also that engagement around the cost, as opposed to a clear all-out saving in terms of you would get with the PPA. So yes, it's a reduction of running costs in terms of the diesel generators, and also savings in terms of downtime costs when there is no power. But it's still ultimately a cost at the end of the day, and we're trying to inform our clients that it's a worthwhile cost if you're considering the entire your entire energy usage strategy. So reducing costs on solar, and then having the security of supply, and then just having a holistic approach to how we're going to market with these solutions.
Thanks for that. And just as a follow-up, I think you both mentioned financing as a key challenge for some customers, and I think for some customer groups more than others, where they have to get financing from a third party or from a bank. I know for our installation, it was really a challenge also to get financing, as I'm a tenant. I have a relationship with a bank, but I don't own the house I live in, so that was a challenge, and took several months to get approval from the bank. So maybe this is a broader follow-up question to the rest of the panel. If anyone wants to comment on solutions you're seeing to financing that are working well for your customers in the market, any other gaps or ways to potentially address the gaps for medium, low income individuals, residential homes, as well as small businesses that may not have the financing themselves through banks or through existing cash they have available. If anyone else wants to comment on that. I could call
Chris,
on you. Okay, there we go, Frank.
Hi, Chris. Thanks. Maybe just to comment on that, because in my experience over the last few years, I don't think there's a lack of capital available to invest into projects, and that's finding its way into projects of all scale. You've got small scale funders who are funding rooftop systems, both private equity, if you like, and banks putting together packages for rooftop solar and battery, both for residential, in the commercial space, and then typical project finance emerging for these projects for the private space as well. We've just had, I think, one of the largest private offtake projects reach financial close with Lepelala, with Synergy and Exaro. I think the challenge often is a mismatch between what clients want in terms of finance and the finance that's available. So the assets, these PV battery assets tend to be long-term assets, and often associated with long-term PPAs, where customers might not be actually happy to take the risk with a long-term PPA, or the issues that customers are not bankable. So they actually can't raise finance because of their financial position from a commercial perspective. So it's not just that it's a challenge for them to get banked for a solution, but the business themselves couldn't raise finance anyway, because of the state of their business. But the market, from my perspective, is absolutely booming in terms of the amount of investment money being deployed into, renewables infrastructure, if you like, at all scales. And every month there's almost a new entity providing finance solutions in an innovative way to the different spaces. So yeah, that's just a little bit of what my experience in the last few years, and particularly I would say in the last 12 to 24 months, there's been a real boom in both the EPC side of the business, but also on the financing side.
Thanks for that, Frank. That's helpful context. And yeah, I think you're right. I have seen a lot of products being released into the market for rooftop solar or different sizes of solar installations and storage. And you mentioned the mismatch, I think, between expectations maybe from the customer and what's available in those products. I think that the terms and the tenor for a lot of those are like a 5-year payback for a lot of those products, or definitely less than 10 years. And the lifetime of this equipment is 20 years for solar panels or longer. So I think there's still opportunity to address that of aligning the financing with the lifetime of the infrastructure or the lifetime of the equipment to really help customers save money, and not just spend more per month for that extra reliability. But I think this segues into our next topic as well. How do we integrate solar and storage into the grid to enhance resilience and stability? So the first question then is for Agrippa. Maybe you have something to add on the discussion we've started already, but also if you could elaborate on the importance that you're seeing in the market for solar energy and storage thus far. Agrippa, I think you're on mute.
So Mr. Agrippa may be having some network issue.
Okay, no problem. Then we'll come back to him when he joins back. But then we can stay on the topic of grid resiliency and stability, Frank. Since you just helped with the question on financing, but I think a big challenge we're seeing in the market too in South Africa is grid constraints, specifically in the Northern Cape, where there's already a lot of solar installed, and also in the Western Cape, where there's potential for more projects in the pipeline. So what are you seeing as potential options for storage to play a role to help with that, help with those grid constraints?
Yeah, so absolutely, Northern Cape, Western Cape, Eastern Cape, for the large scale projects, the transmission infrastructure has become congested. But I think what is important to note that congestion isn't 24/7. It tends to be limited to the times of the renewables generation. So exactly, solar plants are predominantly producing, when the sun is shining, and thus the grid is maxed out from sort of mid morning to mid afternoon. But for the rest of the day, there actually is arguably still capacity on the grid. And so I think one of the challenges historically, when grid capacity is allocated to a project, it's been allocated on a 24/7, 365 basis, that the power plant actually has access to the grid to generate, every hour of the year. And perhaps we need to evolve to be able to allocate capacity on a time basis, because then you could have an additional power plant build that would then deploy into the other hours of availability. And I think this is where batteries absolutely can come to play, because firstly, they can time shift energy. So theoretically, you could build another PV plant that fully charged batteries, and then the batteries could deploy into the non-congested hours. Or alternatively, you could build another technology that was more synergetic. So, for example, you could build perhaps wind farms along with the solar, because the wind tends to be more morning and evening. And then you could perhaps use a smaller battery to do smoothing, so that there wouldn't have to be quite as much curtailment. Now, what we're also seeing is that I mean, Eskom is well aware of this. So if you look at where Eskom is building batteries and also where the IPP office has done their first bid window for storage, the so-called ESIP as the sister to REAP, those batteries are all in the Northern Cape along the corridors for exactly this reason, to try to unlock additional capacity. The traditional way is to build more lines and subs, but that's an incredibly expensive way to unlock capacity if the congestion is only really time-based. And so I think we're seeing South Africa become actually quite a big battery market almost overnight. Well, talking at the utility scale, since we have this current procurement for over 2 gigawatt hours happening now, and then hopefully early next year, the second round of procurement for almost 7 gigawatt hours worth of batteries. I mean, and all long duration storage. It's actually quite exciting that we're seeing South Africa suddenly become a world-class deployer of large-scale projects, exactly for this reason, to help unlock grid capacity. But of course, I mean, the reality is that's at the sort of super large projects transmission level. Building generation and storage also right down into the distribution networks and behind the meter also, of course, can make a lot of sense, and also can unlock capacity. So where a distribution substation might be constrained at certain times of the day, deploying storage there to, say, charge at night and then dispatch into the constrained times of overcapacity can also enable more loads perhaps to be connected to substations, because that's another side of the coin where people can't expand their businesses because they can't get access to the grid. Batteries can actually also unlock more grid capacity for businesses to be able to expand their demand, let alone all the other benefits that batteries can have in terms of increased renewables penetration or tariff arbitrage or peak demand shifting, which can also all happen behind the meter.
Thanks for that, Frank. And it looks like, Agrippa, we have you back as well. But maybe you can add on to that if you want to elaborate on the importance of solar and combining energy storage, and then also maybe the economic benefits of solar energy and storage integration.
Good afternoon. Thanks, Chris. I think I was disconnected a bit. So I agree with the panelists here. So what I would just like to add is really we have seen this growth trajectory of solar energy in recent years. And for South Africa, I believe that is driven, yes, by load shedding. But what I've seen is it goes beyond that. I mean, in case, we no longer have load shedding, I think there are other factors such as declining costs. If you were to look at, the cost of, say, the solar system now compared to a few years back, the technological advancement and also the increasing environmental consciousness that has really, been enhanced. And if you look at our South African government, also businesses and individuals, both locally and also at a global scale, they have embraced solar power as the key component of the energy portfolio. This is because of the scalability, the versatility, and the abundance of the solar energy, especially in our country. So this is making solar to be a viable option for both centralized at a lower scale and then decentralized energy generation. This is because it contributes to it will continue to contribute to the more sustainable and diversified energy mix. But just zooming into, say, the role of energy storage, I have participated in several discussions where a point is always raised that while solar energy offers numerous advantages, its intermittent nature poses challenges for grid stability and reliability. And it is a valid point, right? I always validate that point, but in this engagement, my response has always been that the energy storage system is the solution to these concerns. This is because BESS has emerged as a crucial tool for mitigating the variability of solar power generation. If the energy is captured and stored during, say, periods of high generation, this energy can then be released during periods of low generations, ensuring that more constant and reliable electricity is supplied. And the integration of solar energy and energy storage technologies has the potential to revolutionize the energy landscape and also to transform the grids into more flexible and reliant and efficient systems. And I just also want to add that, yes, it is a fact that the capital investment, it's really high. But within my organization, what we've seen is, trying to come in as also a financier, where we're looking at options, lease options or a short-term PPAs, within the mining space or within the commercial space, for rooftop support. There is an interest or an appetite, to go that route, as most clients really don't want to be locked into these high PPAs. Thanks, Christopher.
Thanks, Agrippa. And I think you raise a good point that I think storage has been on the cusp of solving a lot of our challenges with the renewable energy sector for a while, and now that it's become more economic, it really is starting to make a big impact there. And I also wanted to get Nitin's take on it. I know you've worked on a lot of markets internationally, but maybe you can provide us a little bit of an overview of the different topologies for the battery energy storage systems, along with some of their advantages and disadvantages, just for some more context.
Right. No, thanks a lot, Chris, and great discussion so far. I think we heard about the need for storage and the transmission line capacity, load shedding. I think one key thing that we have learned through our global experience, if we put energy or electricity market like a chessboard, then probably storage is the horse, which can move in all direction and jump through the boxes, right? Because it can charge, it can discharge, and it can do bunch of other activities. And the real value lies in terms of being able to stack multiple solutions that battery brings in. And that is when we start generating good revenue for the end customers, and the asset becomes much more usable. Going forward, I think what we have seen, there are three different topologies in which we integrate solar energy with storage. One is our standard AC coupled design, which is like connecting battery storage on the common AC side of the bus. Very standard, very stable, but obviously it's a little bit more costly. Plus, the overall efficiency of the system goes down because of extra transformers and multiple conversions which are happening from DC to AC and then AC again to DC to store in the batteries. On the other side, beyond AC coupling, what you have is a DC coupled PV storage integration. Now, that definitely gives substantial benefits because solar is generated as DC energy through our existing solar panels, and they can directly be stored into the batteries. That's a topology which will take care of any curtailment in solar. I think Frank talked about the peak of the solar going up and then going down. So if you want to right size the AC output capacity and still use a substantially larger DC PV capacity, DC coupling solution gives much more advantages with regard to capturing the curtailments and any other challenges, right? However, it does have one disadvantage, and that is it cannot be charged through grid, right? Because it is connecting to the AC side using the unidirectional PV inverters. So that's a challenge with a DC coupled system. But in case that's not the requirement, like in India, there is a clear mandate that storage cannot be charged in a utility scale project using grid. It still becomes a very viable solution. And the third topology is what we call as reverse coupling. That is kind of the best of both worlds combined together. So there, what we do is we use the DC-DC converters, which is converting solar power and putting it into batteries, to also integrate the MPPT converters and then connect a bidirectional inverter. So it can also do the grid forming activities in case the grid is down, plus also it can charge the batteries using grid. So these are like the three different topologies, and depending on the use case, one topology might make more sense. So maybe AC coupled is a good solution for a very strong grid scenarios. DC coupled when you have much larger solar capacity or the space available for solar. And the reverse coupling could be a great solution for your islanded or the microgrid kind of solutions.
Thanks, Nitin. I really like the chess analogy. I'm curious to hear how the other pieces fit into the the energy. we can get into that later.
Yeah. The customer is king, so that I can say.
But those are some interesting use cases, I think, for storage, and I think we see a lot of AC coupling and reverse coupling. I haven't seen as much DC coupling in the South African market, other than maybe in kind of the lower income off-grid installation applications. But just as a follow-up, do you see a lot of DC coupling used at larger installations in other markets?
Yeah, I mean, I think the whole genesis of DC coupling storage solution was in the US market for the ITC credits. But since then, it has moved beyond. We do see DC coupling scenario. I'll just give you an example. In India, again, like provinces in South Africa and India, you have different states, and each state can have different regulations with regard to whether you can do an OPEX or a PPM model based on the grid connectivity. So there we could do the DC coupling scenario for large warehouses to use their roof, right? And put that energy into the batteries, because the roof can take like 5 megawatts of solar. However, the connected load was still around 600 kilowatt. So in order to utilize that, we did the DC coupling solution and kind of use the solar power, as again Frank said, in a much longer duration cycle. So we do see these kind of interesting use cases happening.
That's really interesting. And maybe this segues well into Brian. If you have anything to add on to that, or also want to talk about maybe some potential for other battery technologies that we could also be considering. I know that most applications in South Africa are now using lithium batteries in some form, but is there still a role for other battery technologies, and can we still use the old lead acid batteries that some people still have on the market, or should we be phasing those out?
Yeah, good question, Chris. I think a lot of people are of the view that lead is dead, and I don't. I think in our experience, what we've seen in a lot of the mini grids that our clients across Africa are using and supporting, lead is very much still alive. And in fact, in some cases, still a chosen technology. So it really depends from case to case, how it's going to be used. But I think we all know that lithium has a really sweet spot when you're cycling it quite frequently, which has become the case in South Africa. So when it's limited backup, lead really has an application to play, and if it's managed well and controlled well, then it can certainly have an extended life period. I was chatting to a colleague of mine recently in Germany, and who's got lead acid batteries that he's been using for 8 years, and they're still very healthy. they have to retire them after 8 years, it seems, there as well. But yeah, so I think mostly it's lithium, and where we focus behind the meter, mostly with the control technology, it's about getting the most out of the battery, whether it's lead acid or whether it's lithium. It's about having that battery perform in the way that you wanted it to model. And when you come to sizing those plants, the hybrid plants, you're sitting with grid, you're sitting with PV, battery, and genset, and how those interact with one another is what the determining factor is. So we've even seen cases where clients of ours have connected lithium batteries to an old existing lead acid system, and then using a controller to balance those to something like a FernFlex controller, which we do. So I think there's a lot of scope for that. And just to touch also on some of the points raised by Frank and others earlier, you're sitting with use cases in SA that are arbitrage, tariff arbitrage, that you're trying to maximize. Then you've got to balance that with the weather, and balance it also with our load shedding schedule. So you can design a system, size it nicely on a spreadsheet or using a nice design tool. But if you don't get it to behave in the way that you've modeled it to behave, then it's not going to generate the revenues. And of course, we want to be able to maximize the performance of the plant, have the balance between when you charge a battery, when you shift the energy, you store it, and minimize the use of diesel gensets as well. So yeah, I think the technology plays a big role, but how you manage it is really vital.
Thanks, Brian. Those are some interesting examples and use cases for different combinations of battery technologies. I always thought that lead acid had a lifetime of less than 5 years, but if there are instances where it's working longer, that definitely helps the business case. Our next topic has to do with policy, financing, and regulatory considerations, which is always a big topic within the renewable energy space. It's still a political industry, political market. So we do have to factor that in, especially when considering large government procurement programs. And now that it's becoming more privatized and more private projects, we still have to consider the regulations that enable that. So turning back to Agrippa, can you speak a little bit about maybe some of the policy considerations that we should be keeping in mind to sustain this growth for the solar industry in the region?
Yeah, thanks, Chris. I think where it really needs to start is really the collaboration. Collaboration between regulators, between utilities or the utility, and also the industry stakeholders. It's important that they collaborate and develop comprehensive policies that encourage investment, innovation, and also long-term viability of solar energy and energy storage integration. And maybe just looking ahead, I believe that the future outlook of solar energy and energy storage integration is promising. Based on the discussion and what we've seen, and a rapid advancement in technology, also coupled with decreasing cost, especially in South Africa, the driving widespread adoption. And continued policy support, research and development efforts will further refine the integration process and making it more efficient and reliable, also economically viable. But I just want to zoom into just 3 things which we have seen recently. I think the first one is the incentives and the subsidies. These, at a global scale, also our government has adopted, the incentives and the subsidies to recognize its importance and the adoption through various measures such as investment tax credits, feed-in tariffs, the net metering programs, and also grants. I think these incentives aim to stimulate investment and drive innovation, and also to accelerate this deployment of solar energy systems. However, policymakers must carefully balance this support mechanism to ensure their long-term sustainability and to avoid market distortion. You can see what, say, the government of Cape Town has done and what other governments are adopting this side. I think there needs to be a balance, and there needs to be sharing of information so that the incentive and the subsidy policy can be successful. Also, just to zoom in a bit on the grid interconnection standards, I believe that the seamless integration of solar energy and energy storage into existing grid infrastructure requires clear and standardized interconnection protocols. We need to have well-defined guidelines regarding the system capability, safety regulation, and also technical specifications to facilitate smooth and efficient integration of this solar power and the energy storage integration. There is a bit of work that's being done, but I think we can expedite the process and also enhance this process. And lastly, also on the market structures and regulation, I think there's some work that still need to be done. We need a creation of effective market structures and regulatory frameworks just for realizing full potential of solar energy and energy storage. Time of use, pricing, demand response programs, and capacity markets are some of the policy tools that can be used to incentivize and deployment of energy storage systems and just to promote the grid reliance. It's important that there's alliance or alignment within the market mechanism with these processes. So that they can be, a success and standardization within the policy making. But I think a lot of work is being done. We just really need to collaborate, especially us as industries, putting in our input. That it's not just from the policymakers who make the decisions and finalize. So as industry, we need to then also send through our inputs so that they can be incorporated. Thanks, Christopher.
Thanks, Agrippa. Yeah, I fully agree. I think you raised some great points about some of the main topics within the regulatory sector that are kind of enabling the growth here, but also kind of a call to action maybe to some people that work in this space to continue to make sure the regulations are implemented in a timely way and in a way that then helps the market to work. Like I think we've been talking about unbundling Eskom for several years now, and it still hasn't been finalized. So making sure there's pressure and accountability to implement some of these changes is also important. I also wanted to ask Sekile, maybe you had something you wanted to add that Agrippa maybe left out or some related to that question. But also if you could expand on how you think the change in electricity market in South Africa will impact the battery storage market.
Thanks, Chris. And I think it's just maybe bringing home the point that Agrippa's just raised and you just mentioned as well, just around the market structures that could then sort of incentivize the growth of solar and storage. I mean, the transitioning that we're currently seeing our Eskom go through from the single buyer model to an almost open electricity market where there'll be a system operator, then that will from our side as solution providers and to touch on what Nitin mentioned a bit earlier on demonstrating value and stacking these sort of services on top of each other for assets, so solar and storage assets. The market framework and the market structure can sort of allow us to position these assets as contributing more than just a load shedding mitigation or some sort of offsetting diesel costs. So I think, and I'd love to get sort of more comment from the rest of the panelists, but it presents quite an opportunity for the higher penetration of renewables, as previously mentioned, but these various markets in which storage assets can participate in grid services such as capacity markets that the group has mentioned, and then some sort of flexibility or demand side response. I think that would be an enabler for the growth of solar and storage, even at a distribution network level. If these decentralized assets can participate in those markets, not only your I suppose your utility scale or your big generation assets. So yeah, I think the transition to a market-based economy or market-based electricity sector or supply industry will unlock that value as well for solar and storage at all these levels of markets. Yeah. Thanks, Chris.
Thanks, Akile. And Cobus, did you want to add to that at all? And I think we also wanted to touch on the topic of addressing regulations that would enable low-income and middle-income customers, as well as small businesses, to also benefit from this clean energy transition more effectively. Maybe that's also a financing gap too that needs to be addressed there. But Cobus, if you had anything to add on that, or Sakila or Agripe wanted to add on that follow-up question as well.
Yeah, thanks, Christopher. Yeah, I agree with for market entry. I think we need some form of mitigation to unlock storage for financiers, also to assist with grid reliability in say the peak periods where you're typically between your 6 and 8 or 9 in the mornings and your 7 to 10 at night, where solar is not a viable solution to offset the demand. I think, yeah, if we can maybe get even tariff structures in place that can incentivize investment into that sector to basically assist with stabilizing the grid through means of a cost-reflective tariff. I think that is a good start point from utilities and municipalities, which is something we haven't seen yet with feed-in tariffs. The rates are so low that, yes, it makes sense now for grid-tied solar storage, but not yet for energy storage systems to assist with where the actual problems are, and that's in the morning and evening peaks. But also from that, I think we also would like to see more streamlining on the applications for small-scale and better generation systems. We've seen with the likes of Eskom that these processes can be quite tedious and time-consuming to get a system registered and approved by the utility or by the municipality to legally and safely connect to the grid. And now with Eskom and the latest development on grid access unit for all the systems above 1 megawatt, there's been a lot of pushback from the industry because the requirements stated in the conference or online conferences that they held is quite, I don't know, laden with red tape, if I can put it like that, because it will just hamper progress in that section and to basically assist and alleviate the grid problems that we are experiencing. And from that, also NRS guidelines, which has been released at the end of February, on the batteries charging on the charging limits being reduced to 25% of your maximum demand. That is also basically stifling growth, because you can't, with a stage 6 load shedding, with 4 hours in between state load shedding events, you don't have the capacity at 25% of your rated demand to recharge your battery, just to have another 4-hour load shedding event follow that. So how do we overcome this? And yes, we can. I know the NRS is a regulation, but the municipalities have adopted this as a law, and sometimes it depends on who you deal with, but you can run into a situation where your system is not approved, even though you can prove that you're not impacting the grid in a negative form, but you have all the so the checks and balances in place to make sure that the system is operating correctly and safely. But yeah, for me, a great concern in the regulation space is with the rapid increase in battery system adoption is the fire safety component to this. We have the building regulation SANS 10400T, but it seems if you look at social media and statements by current, say, solar electricians and installers, that this is not very well understood, and the risks associated with that is not always being mitigated. And this is a potential to have a big problem, not just in South Africa, but I think it's a global problem. With you could see the events with fires breaking out on their solar installations, and like you say, with low and medium income housing, if you have a substandard solution or a non-compliant solution that's installed in occupied spaces, you have a potential risk of life. You have issues where people's homes and businesses can burn down if the right policies are not followed and put in place. But with that said, we have seen a big traction on regulations and the drive to get that in place and followed, with even the manufacturers becoming or coming to a point where they basically state in their requirements that you need to have certain checks and training in place, or else your warranty will not be honored, which I think is a good drive from suppliers' side to make sure that these systems are installed in a safe manner and correctly according to what the intended purposes are. But yeah, that's from a regulatory point of view, because it is a requirement for a homeowner to keep his electrical system compliant, for instance, but I don't think the information is readily available to everyone to make sure that the homeowner can get his installer to comply. I think that's I'm not say policing, but an enforcement issue, that we have the regulations, but how do we make sure that these are basically being followed and adopted correctly?
Yeah, those are some great points, and yeah, enforcement of the regulations is a big one here, and accountability with the installations. You had a good idea about linking the warranty to that too, to provide that extra incentive. But I wanted to check, did Sakile or Agrippa have anything to add to that before we move on to the next topic? No. Okay. So the final topic has to do with solar storage, mitigating energy supply challenges, and ensuring uninterrupted power. I think we've touched on some of these topics a little bit with some of the discussions already, but it's probably getting into more detail on customer solutions for battery storage, maybe at the commercial, industrial scale and residential scale applications. So going back to Frank, I think you did mention earlier about some of the behind the meter storage potential applications for solar plus storage solutions. Did you want to expand on that a little bit? Could you expand on that a little bit more?
Yeah, no, certainly. So in a lot of the modeling work that I've been sort of involved in over the last couple of years, what we've often seen is that the deployment of storage behind the meter by itself, it's actually quite a difficult business case to make off the back of what we would call a single use case. So even looking at the load shedding that we're happening at the moment, if all you were buying the battery for was backup power, depending on your view on load shedding, if you took a view that load shedding was going to be fixed in, say, 2 to 3 years, which may be optimistic, but there are businesses taking that view. If you ran the economics, you would find that actually running a diesel genset would be a cheaper option. Now, of course, that comes with the carbon footprint and the noise and whatnot, so it's not always suitable. But it was hard to show that a battery by itself for backup power could actually be competitive on a short application for backup power. But what we were starting to show to clients is that if you started bringing in all the other use cases or other things that the battery could do, as well as that you could actually build an economic case to deploy a behind the meter battery. And some of those, that I'll try to go through all of them, but the first being the ability to increase the renewables penetration. So where, let's say, you might have a shopping center that might have like a 1 megawatt midday load, and you build a 1 megawatt PV plant, unless you're able to export to the grid, it didn't really make sense to build more than 1 megawatt, but that might only cover 30 or 40% of your electricity demand. By deploying batteries, you can now obviously build a bigger PV system and use that system during the day to charge the battery, and then dispatch the battery at other times. So now you've added another use case. You've got the battery doing backup power, but it's also allowing you to capture more cheap renewables. And obviously, as we try to decarbonize, that's also important. So there's the value of increased decarbonization associated with that. Then another key application is also, so those are the first two. The third one that the battery could also be doing simultaneously is tariff arbitrage. So basically shifting energy around to make sure that you buy energy when it's cheap from the grid, and you basically discharge from the battery when it's expensive. And of course, many larger customers are on a time of use tariff that like Megaflex from Eskom, for example, that then has 3 different rates, the peak, standard, and off peak. And peak, particularly in winter, is off the charts expensive. So if you can actually charge the battery with solar energy and dispatch it then into peak to avoid peak consumption, that can actually be a huge saving. And then on top of that, there's also peak demand, where you get charged for your sort of maximum consumption in kVA over the whole month, just over a sort of 15-minute or 30-minute averaging period. And again, a lot of businesses, depending on their processes, might have a peaky demand curve where they have peaks throughout the day because they've got compressors starting or other equipment starting, but their actual average is actually well below what those peaks are. So using the battery to actually catch those peaks and reduce those peaks can lead to a substantial saving on peak, what's charged for peak demand, or even being able to lower the notified maximum demand in some cases. And so as you stack these different uses of the battery in a particular client's demand curve, you suddenly can actually unlock the full value of the battery, and show that the business case makes sense, because you're now generating revenue streams in a sense from multiple applications. I mean, some of the other ones that perhaps have less of a value, so power factor correction. Again, if you've got the battery and you have poor power factor, and that's contributing to your kVA demand charge, oversizing the inverter to do the kVA correction is something that you can do. And even power quality issues. If you're having issues with brownouts or other issues, the inverter and the battery can help bolster voltage and during issues of voltage control. So all of these things work to create value for a sort of behind the meter project.
Thanks, Frank. I think that topic of value stacking is really, really important when talking about storage and its applications. And I think it also brings up a point that I think Sakile wanted to talk about of potentially challenges that you're seeing that businesses are dealing with, maybe that relates to some of the value stacking or the applications of some of these approaches that Frank has mentioned. Are you seeing some of those challenges in your experience, Sakile?
Yes, absolutely. I mean, I think Frank covered them quite thoroughly there in terms of there's obviously the technical considerations that Cobus mentioned earlier there around NRS and the requirements in terms of how to size or model a battery based on the notified maximum demand, and that being some sort of I guess a limiting factor for us in terms of in how we model these solutions. And then as Frank just mentioned now, the fact that we're businesses are struggling to perhaps understand the full value of these solar and storage solutions when they're faced primarily with issues around diesel costs or escalating diesel costs and the requirement for immediate backup power. So the requirements are focused on those sort of two factors, but then how we try to overcome, or how we have been overcoming through the modeling, as Frank mentioned, is stacking or representing these solutions as more than a single use a solution or single use problem solving. How we look at things as such as the peak demand reduction, the power factor correction. Those are all sort of these challenges that when clients approach us, they're not quite completely aware of, I guess. So that it brings us back to that point of consumer education, and sort of hand holding and basically having the right skill set and tools to demonstrate the fact that on a single use, the battery storage solution might not necessarily meet the requirements that the financial requirements or the financial thresholds that our clients approach us with. But when we then elaborate on the various other value streams within the solar storage, or particularly the energy storage solution, then it sort of gets us over the line with these clients of ours. Yeah, thanks, Chris.
Thanks for that. And I was hoping Brian may have some potential solutions to those challenges as it relates to distributed resources and yeah, what are some solutions that you're seeing to address those challenges?
Yeah, I think I mentioned it earlier. Thanks, Chris. Really, the control is what we're seeing is making a big difference in our clients' lives. So you can sit with all the great equipment, and it's really important to have good equipment that's installed safely and according to good standards. But if they don't behave in the way that you intend, you sit with the problem. So it's important to have things, since solar is the cheapest form of energy at the moment, how do we ensure that most consumption happens in symmetry with the production of solar? And Frank alluded to it earlier as well, one way is to store that energy and use it later. The other is to defer certain loads. So if you've got time shifting and dynamically shifting some of those loads, that's really great. If you can do that, that makes a big difference. So using a controller that puts that sort of logic in the hands of the installer, I think is really vital, because we've seen it often giving our clients that sort of edge where you can maximize when your battery kicks in, and limit the amount of diesel that you're using and your reliance on the grid. Also, one thing we've noticed is how our countries are using tariffs to modify behavior, and we saw in Germany, for example, who's really led the way in many of the solar installations that we follow, is a decade ago they had a feed-in tariff of 40 cents. Now you look at the feed-in tariff of something like 7 cents. And that's because it's become less necessary, but it's brought about a desired behavior. So there we're seeing, and I think we might be coming to that point soon here, where it's a bit of a change in philosophy where you're not you're looking almost like a UPS kind of system. It's always on, and you draw on the grid when you need to, as opposed to always draw on the grid and use it as a backup system. And I think that has many advantages in propping up the grid where we need it, without having to necessarily get into the complexities of feeding in and managing all that sort of thing. So again, having a simple controller that's meant for distributed renewable energy systems, and that is easy to configure load shedding schedules, looking at tariff schedules, balancing those two out. If this then happens, then do this, take this action. And look at the weather. If the weather's bad, make sure you've got enough storage to cover you in that sort of side, and then coupling that with load control as well. So I think, those are the sort of solutions that are available.
Thanks for that, Brian. Yeah, those are definitely some good insights for the technical solutions to overcome those challenges. And I think there's also opportunity for, given the complexity of South Africa's market, there's over 200 municipalities with a dozen different tariff structures and tariff categories within that. So there's also, I think, potential for collaboration with municipalities to help standardize some of these tariffs so more customers can benefit from time of use tariffs, for example, and really benefit from that value stacking that Frank was referring to.
Absolutely.
And wanted to also get Nitin's take on this. Given your experience in some other markets like in India and elsewhere, just given what we've spoken about so far, are there other examples or lessons that South Africa can learn from some of the other markets that maybe have already implemented some changes to its energy storage regulations or market incentives to date?
Right. No, I think there could be a lot of parallels, Chris, and thank you for this interesting, insight. Because, see, one thing I think many panel members, they talked about how do we get the benefits of storage to maybe the small and medium industries as well as maybe the households. Now, one thing that we are doing and engaging very closely with different distribution companies in India is that to provide storage at a substation level, now the distribution substation level. So if you have a 690 kVA transformer or a 1 megawatt transformer, which is providing to a set of industries or a set of households, are they willing to pay maybe 5%, 7% extra just for cleaner energy, greener energy, as well as the more reliable energy? And at that point in time, the financing is done to an entity which is not small and medium industry or a household, but to an entity that can have some better credit ratings, right? So that could be one interesting way to adopt this. Other thing, what can be done is we are seeing some very interesting work done on the mining and agriculture sector as more and more electric vehicles or the electrifications of many of these equipments are happening. So providing the whole infrastructure for the mining and agri to start using more and more of electric vehicles is a very interesting use case that can be explored in South Africa. Another very interesting parallel that I can draw is I think the industrial behind the meter use cases. Now, I think we talked about many different use cases, but one very interesting use case which can also be added and which gives a substantially faster payback is the backup power. Now, many countries, and I think in South Africa, for larger industries, you would be using UPS, right? Now, the UPS by nature is connected in series with the load. What it means is there is a constant 4 to 5% or 6 to 8% of losses, which is built in. And if you do some calculation, those numbers would be substantial, going up to, for a 1 megawatt, the losses could be, almost to the tune of 4 megawatt hour or something like that on an annual basis. Now, to use battery storage with a technology, what is called as the grid forming, or what we provide, the patented dynamic transition technology, can substantially improve, like almost 97% savings when it comes to the UPS, right? And that can give you a payback of maybe around 3.5 years, depending on the tariff. Now, two last things. I think another parallel that I can draw is Indonesia. Very similar situations. I can see, like in South Africa, you're using around 0.7 to 0.8 billion liters of diesel annually. I believe South Africa is a diesel import or a crude importing country, almost to the tune of $1.1 billion of import. So what I can say is somebody who can get the things done right, there is an opportunity of investing $1 billion with minimum 15% IRR. And that's a great business proposition. And this is something that we saw in Indonesia. We partnered with a great company there and doing one project on the microgrid, which is around 10 megawatt of solar for powering up the industry for like 12 hours a day on solar plus storage. And one final thing is probably at some point in time, the green hydrogen. So we are seeing lots of adoption of green hydrogen and use cases, which is happening. We did a DC microgrid green hydrogen, which is directly connecting solar on the DC side to generate green hydrogen. Now, this is being done at a steel factory in India so that they can use that green hydrogen for their steel processes as a feedstock. So that could again be a interesting ongoing use case for South Africa in future. So I see there are a lot of interesting things, and the market structure is also very interesting because you have double peak. So one peak in the morning hours, then you have the solar hours, and then the second peak in the evening. I think the IRRs of battery storage project could be very, very interesting in South African markets.
Yeah, those are some great examples, and I think that might be a good place to wrap up this conversation before we go into the Q&A. Just ending on some of those the international examples that are out there, and that others have gone through some of these similar challenges other countries have and overcome them, both technically as well as market and policy challenges. But wanted to just also check if any other comments from our panelists before we move on to the Q&A.
Hi, Christopher. Kubus here. Maybe this is something that Brian can share some light on, but I think he touched on the subject, and everything comes down to the controller and the control capability. But this is this has a direct impact on how we model savings to the customer based on the capability of the controller. And the controllers that our simulation software has got embedded is not necessarily available to the South African market, as it is, say, a European-based or a US-based controller. And to effectively manage that in a simulation model to give accurate savings projections to the customer, I think that is been one of our biggest challenges to date. And yeah, we haven't been able to get a solution yet. So there's a lot of manual intervention required at the moment to do a more detailed analysis of storage onto the customer. So yeah, I don't know if Brian can maybe just shed some light on that and what is available to us as system and solution providers.
Yeah, good question, Kubus. I think that finding that match between the assumptions and the modeling and the final output is the key. And so from our side, we have an end-to-end platform that allows you to design a microgrid system in the beginning. And it's quite closely linked, I think, in theory and in principle, to what you can output. But the real way of managing that is to make sure that the controller that you're using can simulate what you modeled, keeping it simple, and having a pretty good hands-on bespoke thing, because every single site is different. So you can't have a plug and play kind of solution here. It's something that's got to match your site, your tariffs, and the individual system that you got. So yeah, I'd be really delighted to chat to you offline about it as well. But yeah, certainly bringing that match together is becoming more and more possible. Not to say it's easy though. That's why we need skilled guys that can manage that process on the ground.
Any other parting thoughts or final comments from the panelists on anything that was brought up? Okay, then let's. I think we only have 10 minutes left, so hopefully that's enough time to get through a few questions. Meenakshi, did you want to take us through those?
Yes. Thank you for the panel. I'll just show the first question on the screen. Avanti, can you show the first question on screen? Christopher, you could probably ask one of the panelists to answer this.
Yeah. So, do any panelists want to have any answer for this one?
Chris, yeah, I'm happy to make a comment.
Go ahead, Frank.
Yeah, so I agree. I think this is actually probably one of the biggest challenges in the industry is quality of installations and training of contractors, because the standards are limited still in South Africa, and even then, it doesn't necessarily guarantee that they followed or that best practice is implemented. And so it is a bit of a buyer beware, especially I think in the residential sector, in terms of solar installations, that, generally I think the product tends to be good. The solar modules and inverters tend to be good. The batteries typically also tend to be reasonable quality. But where we really see issues is in the quality of the installation. So, possibilities for faults. I mean, there have been some lithium files already, probably again related to the installation, where perhaps terminals have not been properly tightened to the correct torquing. I'm aware of where solar modules have flown off roofs, and again, that's probably due to incorrect torquing of clamps on the roof. There's been cases where roofs have caved in, which is, perhaps one of the challenges with residential installations, that the cost of doing a structural analysis can be expensive. So it isn't easily answered. I mean, from the South African PV Industry Association has tried to put some level of quality, additional quality assurance in place through the use of their green card training program. But again, I think ultimately, at the moment, if my recommendation is when I'm asked by friends and family, where do I go to have a solar PV installation installed, I'm like, find a reputable contractor. Ensure they've been in business for quite a while already in South Africa. At the very least, they should have contactable references where you can phone people up and see if they're happy, and ensure that they have a qualified electrician on board, ideally, a certified engineer as well, because that's probably the best way that you can ensure that you'll have a quality installation.
Yeah, Chris, I can maybe just amplify, and certainly Savia has done a great job in terms of bringing out the PV Green Card, and I know there's some other accrediting organizations as well. But besides that, I think it's just keeping an eye on the system. So most reputable installers would have a good monitoring system in place that would allow you to detect any issues, hopefully in advance, or at least pick up anything and see if there's any constraints like battery temperature, for example, that might be able to kick something off. So yeah, to me, the monitoring side of things shouldn't be neglected at all. Whether it's an OEM system or whether it's a third-party system that brings it all together in a single place, to allow the EPC, especially the reputable EPCs, to keep an eye on what they've done, because we know you can install it today and tomorrow someone else comes along and does something that messes it up.
Yeah, Christopher, from my side, I think it also starts with basically educating the general public on what the requirements are. Like I know the regulations are not where we want it to be, but I think within the current regulation, there is sufficient measures in place, but so the policing or the regulation of those regulations is not necessarily being done. So I think we need to start and educate the public on what their avenues are and what they need to look at in a competent installer. I know there's a lot of behind the scenes movement in terms of the regulations, and we are seeing more and more uptake of IEC standards, which is great because we're not necessarily reinvent the wheel, but yeah, I think education is probably the way to start.
Thanks for those comments. I think we thoroughly have commented on that question. What's the next question, Meenakshi? Oh, here it is.
Yes. Would anyone like to take this up?
If Eskom would ask for RFP to supply peak power, for example, between 6 and 8, purely to reduce peaker plant loads, isn't it almost certain that the LCOS will be lower than peaker plants? And so why is this not happening? Anyone want to volunteer for that one?
So Chris, yeah, me again.
Okay,
so I mean,
go for it.
Eskom does have the standard offer at the moment. I think where they basically buy power. I think it's on a day ahead basis, if I remember correctly. It might be an hour ahead, but it's basically a market mechanism. I think the challenge there is that the contracts are typically for 3 years. So, even though we know that like a solar battery system could produce electricity well below, peaking power. And in fact, I think that the PV battery solutions offered as part of the, the risk mitigation IPP program, the emergency procurement program, shows that pricing well below the cost of running the peakers can be procured. We don't yet have a long-term mechanism other than what was done in the RMIPP to provide sort of peaking energy for the long term. So, I think as more and more market mechanisms get developed, which I think is inevitable, we'll see more and more opportunities. But really, at the moment, the only one I'm aware of is the Eskom standard offer. But then again, behind the meter, I think people are also realizing that doing PV battery systems, we're starting to get to the point where you can make your electricity and redeploy it into peak hours cheaper than peak tariffs. We may not be quite there yet, but at the rate that tariffs continue to go up and the rate that technology is coming down in price, it's inevitable that we'll start seeing private customers doing that anyway.
Thanks for that, Frank. Anyone else want to comment before? Maybe do we have time for one more question, Meenakshi, or is that it?
I think if no speaker wants to take this question up, we can conclude the webinar.
Okay. I think that's probably it for that question then. I think we're at the end of the webinar deadline. So, but just want to say from my side, it's really been a pleasure being invited to moderate this panel and being a part of a very experienced and knowledgeable group to talk on this. So thanks from my side.
Thank you, everyone. It's been a pleasure.
Yes. And a big thanks to all our speakers for this wonderful session. Thank you. And very special thanks to Mr. Christopher for superbly managing the session with his excellent moderation. And your expertise and guidance have greatly enhanced the quality of the discussion. A big shout out to, of course, all our attendees for extending their time and support for the event. As we conclude this event, we assure you that we will be back soon with more exciting sessions. The floor is now open for networking. Thank you, everybody.
Thank you so much.
Thank you,
Thank
Meenakshi.
you.
Thank you, everyone.
Thank you.
Thanks, everyone.
Thank you, everybody. Thanks for attending. See you all soon.